Hello. It is Tuesday, September 9th. Guys, we had this date marked on the calendar for some time. I'm sure you all saw that the job revisions were quite large on the downside. Were you guys surprised? I wasn't really surprised because we've been talking about this for, I don't know, the last month or so. We talked about how Goldman Sachs expected to be 550 to 950,000 jobs. Guys, this is it's becoming very, very clear, and we've been talking about this for the last year, that the last administration was just lying about how many jobs were created, about how bad the job market was, and it raises questions. Was this on purpose? Was it that the BLS was just really bad at their jobs? I don't know. I don't have the answer to that, but I do think the findings are quite interesting as far as how the markets reacted and how much of this was baked in. So we're going to talk about that. We're also going to talk about a bunch of new massive institutional announcements around crypto. Guys, there's just a crazy amount of news happening every single day. And I just don't think people realize, because I'm seeing all these people that are bearish on the timeline. I'm like, man, not to say we can't see some more downside in September. We have the CPI coming in on, I believe that's Thursday. CPI numbers. I think we have PPI just after that. So that's going to be very, very telling in how the markets react. And then I've got some DePIN news as well. We had a really good space earlier with Havelo. Love what that project's doing. I have a couple of projects that I'm going to highlight on the DePIN side that I think are undervalued in the sense they have a couple of events that led to some sell-offs that I'm looking at as massive buying opportunities. So I'm going to talk about those as well as Helium, the first official DePIN project become net deflationary. We've been talking about it for a while, but it has finally happened, and that is exciting. You wouldn't know it from the price, but that's okay. That's okay. How's everybody doing this evening? A little bit later than normal. I drove back to Chicago today, so just got back in town a couple hours ago. Wanted to get everything prepped up and ready. Oh, man. What a day. What a day. And the markets, man, markets are crazy, but some exciting stuff happening nonetheless. Let's start off with one fun story, and then we're going to get right into the macro news. I don't know if y'all saw this, but the new AirPods have been announced. They've got heart rate sensing. They've got translation capabilities. Pretty cool. I'll just say, ever since Steve Jobs passed, they haven't had anything too crazy, in my opinion, as far as any major technical and logical advancements. But says they were announced at this all-dropping event on Tuesday. So today, what's cool is the same price, $249, same price. The last version will arrive in stores on September 19th. Actually, my sister's birthday. It says that has heart rate sensing capability. They have LED sensors to provide precise measurements. Collected data will sync with your Apple's Fitness app. So that's pretty cool. The bigger one, though, is this live translation capability. So thanks to the new Apple software update, allow you to have conversations in different languages. So your phone will translate while your phone plays one language and the AirPods handle the other. So that's pretty freaking cool. I wonder how well it will work, because there's always different dialogues and stuff. So I don't know. But pretty cool nonetheless. We get a glimpse into the future. Okay. All right, let's talk about the next story, guys, because this is the date we've had circled for a long time. We've got some other ones. Chad said that'd be pretty cool if it works smoothly. I agree. That'd be really freaking cool. Can you imagine? So, my sister, she's fluent in Italian and Spanish, and I've been over in Europe with her, and I'm like, thank God she's here because I would not know how to conversate with these people. Try to translate on your phone. It's kind of a pain in the ass. So it would be pretty cool if it works well, if it works smoothly. That's the big question, right? I'm sure at some point they'll get it all worked out, but you never know. You never know how smooth it'll be at the beginning. Okay. This is the big story of the day, guys. And this is something that, we've been covering, the big question has been like how much of this has been baked into the markets. And while I'm not surprised at the number necessarily, I am a bit surprised at how much of this was baked in already. We would have expected that we'd see a little bit more downside after these numbers came out, but that's not been the case. Regardless, the U.S. created 911,000 fewer jobs than previously thought in the 12 months through March. So this is the March through March, 24 through 25, Biden's last year in office. It says that here it is, revised down 911,000 by the Bureau of Labor Statistics. If you remember, Trump got all pissed off and like fired like the head of the BLS. Everyone's up in arms. Now I don't know how upset people are because frankly, either this is the biggest revision in history. So in my opinion, either this was political in an election year or that person's just really, really bad at their job. Because yes, they do go off of surveys and it is based off of some assumptions. But apparently their assumptions were not very good. I mean, we saw a lot of revisions downward. This is on top of the revisions we already saw of over 500,000. So, that's absolutely absurd. 76,000 fewer jobs per month. Says it goes on to say the August jobs report showed that the U.S. added 22,000 jobs that month. Obviously, we have to see what that's revised to. June's job growth ended up being a loss of 13,000 jobs. So we talked about that, how that was going to get revised. Pretty bad. My guess that both administrations fudged the numbers. I think that yes, up front, they can fudge the numbers to an extent. The numbers that come in after the fact, I believe, in this case, was based off like tax records from the individual states. So you start getting the real numbers later on. So, they could have purposely overstated numbers, knowing that hey, the election is going to be well over by the time the real numbers come out. I don't know. Like, I'm not a conspiracy theorist, in that sense, but like something doesn't add up here. This is pretty egregious. And, Scott Bessent came out. This is something we kind of knew. After Goldman Sachs said they expected 550 to 950,000, Bessent came out in this interview like a week ago. And we talked about this, how he was saying it's going to be closer to as much as 800,000. But again, this is nearly a million here, 911,000. This is already on top of the 577,000 in downward revisions because they had revised down something like 17 out of 19 job reports. So the Biden jobs overstated just for that year of 1.5 million jobs. I mean, that's pretty bad, guys. And then here's what Scott Bessent had to say about when he.
Sure, the economy did add nearly 500,000 manufacturing jobs under former President Biden. In this case, since April, again, you're actually losing manufacturing jobs. Is that problematic for your policy?
Well, a couple of things, Chris. We're going to get the revisions for last year next week, and there may be as big as an 800,000 job downward revision. Again, this would be the second downward revision. So I'm not sure what these people who collect the data have been doing. It's good. We need good data.
So, yeah, I agree, man. Like, this is crazy. Regardless, we can't do anything about that now. But what we can do is look at how the market's reacting. I mean, we've been talking about this date for some time, and this is what I found pretty surprising. Not the actual number itself, but how the market reacted. In particular, you would think that if the job revision came in much larger than expected, meaning that the labor market was a lot weaker than we had thought, the likelihood of the Fed cutting rates more aggressively, in other words, a 50-point rate cut, which is next week, guys. It's coming up quick, the FOMC meeting. Hard to believe. Time is freaking flying by. We're already into mid-September next week. But this 50 basis point cut would have been a lot more likely if the market was surprised by the number, but they weren't. I mean, I tweeted this out this morning before the numbers came in, and at that point, it was at 17%. So if anything, it seems the market was expecting maybe even a worse number or a larger downward revision than what we got. And that is the thing that surprised me a bit, because we saw a 25 basis point rate cut actually become the more likely scenario in the betting markets. You also look at the market itself, it wasn't that impacted. Like, this type of revision is something that you would think at face value would have like scared markets. it's becoming very obvious this has been baked in. There was an expectation that this was coming. Obviously, we've been reporting on it. The market is pretty smart in that sense. Here's the big question, though. What is the CPI number going to come in at? Okay. Right now, if you look at what the economists are saying, they expect CPI to rise 0.3. This number, again, is coming out on Thursday, I believe. Thursday. So this is the August CPI. So they're expecting it to be a 0.3% increase on a monthly basis, 2.9% year over year. The core CPI, which excludes volatile food and fuel prices, that's the difference. Food and fuel is removed from that calculation. Also 0.3 on a monthly basis, 3.1% year over year. The betting markets are kind of in line. I mean, they're saying that 2.9% is the most likely scenario. But here's what is going to be fun to watch, guys. So obviously the market, I think it partially did bake in the job numbers, but I think people are kind of waiting to see what happens with CPI, because this is exactly what we saw about a month ago, right? The job market numbers came in way weaker. Everyone all of a sudden was like, oh my God, the rate cuts are coming. And then we saw CPI come in a little bit hot. And everyone's like, well, now we have to kind of adjust here, because the Fed has to choose between, they have a dual mandate, right? Price stability, so keeping inflation in check, in the job market. So here's the deal, guys. If the market's expecting 2.9%, that's what's being baked in. Let's say CPI comes in at 2.8 or 2.7%. All of a sudden, I think you're going to see the markets really rally, because that means the Fed can get more aggressive in rate cuts. They don't have to worry as much about inflation. If inflation comes in hot above 2.9%, I think then you're going to see a major expectation for a quarter point cut, because again, then the Fed has to kind of worry about inflation still. They're going to have to do a cut because of the job market weakening, but I don't think they can get that aggressive. So that's why this number on Thursday is going to be so important. So let's hope the CPI numbers come in cool. I also think PPI is coming in, I want to say Friday. I need to look at the date on that. Again, that's the producer's price index. So we saw that came in really hot. And ultimately, the deal there is, the companies are really, the PPI is what they're paying for their materials. The CPI is whether or not they pass that then on to the consumer. Okay, so that's going to be really interesting. The CPI, the PPI, does that come in hot or not? Okay, hopefully not, because that would mean we could start baking in potentially a higher likelihood of a 50 basis point cut. And I think you're going to see the market's going to react pretty well to that. And I think we could potentially see a rally there, but this is where all eyes are going to be, of course. Now, thought this was interesting. This Ted guy, he's got pretty good following. He says CPI data is coming on September. Okay, so September 11th, that is Thursday. The last CPI data resulted in a 9 to 11% drop in Bitcoin, because inflation's been running hot. You see it here, like clockwork. This was the CPI report. Negative drawdown, CPI report, drawdown, CPI report, drawdown. So are we going to come in at 2.9%, which the market expects? Are we going to come in below? Are we going to come in high? That's the question. Remains to be seen. Remains to be seen. Nonetheless, though, I think it is fair to assume we will see at least one rate cut next week, potentially a 50 basis point cut. What do you guys think is going to happen? What do you think is going to happen? There's a lot of people. I mean, I've kind of gone back and forth on this. Like, could it be a buy the rumor, sell the news event? Because I think a lot of the smart money, if you look at insider trading, at these companies, the executives that have all the stock, they're selling. They've been selling for the last month. Retail's been buying their bags. So do they know something that retail doesn't know? Like, is this rate cut not going to be as bullish as people expect? No, I think a 50 basis point cut, I think that would drop the 10-year yield down. 25 basis point cut, I'm not so sure it's going to have much of an impact on the longer term yield. But I don't know, man. We could still see a sell-off. Here's the thing, though, that to me is pretty, it gives me some optimism, I guess I could say. Right now in money markets, so these are people that are, getting a yield on their cash, but want to keep it liquid. So money essentially on the sidelines that they don't want to put into equities quite yet. $7.4 trillion is sitting on the sidelines right now, guys. So, I think a lot of people are like, yeah, market's a little overheated. Things are a little sketchy right now in the job market with inflation. What's going to happen with the tariffs? There's a lot of uncertainty. This is money that's kind of waiting to get into the market. So, I would imagine if we see a big flush out, which could absolutely happen still in September before Q4, there's a lot of money that is going to likely enter the markets. It's just a question of how much of a drop do we need to see before people feel confident to put their money back in the markets. But Thursday, CPI, guys, that is the big one to pay attention to. Let's see when PPI numbers come in. PPI report. Okay, let's see here. We've got week ahead, CPI and PPI. So we've got September 10th, so Friday's PPI. And this is what we saw last time. We kind of got whipsawed back and forth. It's like CPI came in better than expected, and PPI came in hot. And it's like the market was just freaking all over the place. What will we see? What will we see this time around? So Thursday, Friday, very, very important numbers there. But let's talk about some crypto, guys. Let's talk about some crypto. My browser will work here. There we go. Oh, things are getting a little laggy. Let me close up these. Close up that browser there. See if I can get things going. Ooh, am I lagging? All right, we're good. Like I said, the overall market, guys, I mean, not terrible on the day. We've kind of seen, like I said, I think the market largely baked a lot of this in. Let's look at the deep end stuff here. IONET's on the rise. We saw some big movers yesterday, actually. I think Silencia, we'll pull that chart up. Silencia has done pretty freaking well today. Aether had a huge move. We'll pull both those and take a look. But I want to talk about some broader stuff first. Guys, if this isn't a sign, I don't know what is. Peter Schiff is talking about launching or tokenizing gold. He's like, we're going to be doing it. This, monetary metals, they allow you to earn gold and get yield on your gold holdings. They announced that they are going to be tokenizing their gold products. So you'll be able to get yield off of that. If that is not a clear-cut signal that things are moving on chain, I don't know what it is, guys, because, Peter Schiff is like the most anti-Bitcoin person I've ever seen in my life. It's absolutely crazy that like Bitcoin lives rent free in that dude's head. But he's even talking about tokenizing gold products. So guys, things are moving on chain. There's no doubt about it. We then have this announcement. This is freaking crazy. I'm going to play this. I got to get my audio back real quick. But of course, this is the NASDAQ talking about moving everything on chain. And also moving stock trading to 24/7 for the 5 days a week to start with, maybe 24/7, 7 days a week. But here's what they had to say about that.
For what?
You think we should?
Yeah.
Okay. So, so this morning we announced that we're going to be bringing tokenization into our market. So making sure that equities are tokenized and traded on market, in the markets, not in a side sleeve, but actually in the core markets.
So the eventual goal, or is it today? 24/7, 365 equities, just let it rip constantly.
I mean, I think we are all moving in that direction. We announced several months ago that we're moving to 24/5. So we're
24/5
moving that way.
So Saturday and Sunday,
Not for equities yet. I think that, we have to, we're walking before we run. But I think that getting to 24/5 is a major advancement for the US equities markets. And then on top of that, now with tokenization, if we can introduce that also into the markets, it allows us to really think about streamlining the post-trade processing, bringing and modernizing elements of the markets that have a lot of friction. We are hyper resilient and we're hyper scaled. We manage, like today, we had 95 billion messages come into our systems today. And we had a median, return time of 20 microseconds from order to trade. We handle like 3 million messages a second. It's hugely scaled. But then at the same time, once that trade occurs, there's a different process. And then the post-trade process, as we know, is an area where tokenization really shines. really.
So, guys, the stock market's moving on chain. I know all the financial advisors saw this and they're like, God, are you kidding me? Like, I need to sleep 24/7, 5 days a week. So, to start with, talking about going 24/7, 7 days a week, man, I mean, crypto has led the way here. You know how we are. You don't sleep. Especially when the market is up, like waking up in the middle of the night checking your portfolio. The stock market's moving that way. That is huge news, obviously. But it's not just there, guys. How about BlackRock coming out today? I believe this was their chief investment officer, I believe. Let's pull this up and hear what he had to say about Bitcoin and having an allocation in your portfolio.
Bespoke markets. And I think hard assets have to enter the equation today. Gold, Bitcoin, things that give you a little bit of ballast in the portfolio against potential for currency depreciation.
When you talk about
Wow. How about that? Talk about a flippening, guys. Like, it was not that long ago. What was that, like 4 years ago? Maybe not even 4 years, maybe 3 years ago, when the FTX stuff happened and everybody thought crypto was dead. Now you've got BlackRock basically saying, like, hey, you need to have Bitcoin in your portfolio. It almost feels like we're in the freaking Twilight Zone, man. Like, this is absolutely insane. And you know what's crazier than that? I think most people don't realize like what's happening right now. I'm talking to people about moving stuff on chain. They're like, what do you mean? What are you talking about? I'm like, dude, you have no idea what's happening. How about this? NASDAQ's investing $50 million in the Winklevoss funded crypto exchange, Gemini. So it says NASDAQ is investing $50 million in the crypto company in a partnership that will allow the stock exchange to offer Gemini's custodial services to its financial institution clients. How about that? Of course, the Winklevoss twins, the one that they came up with the idea, the Facebook idea. Seems that they've come out okay out of all of that, guys. They're doing just fine. Says that Gemini will also be a distribution partner for NASDAQ's trade management system known as Calypso. It's separate though. Gemini is having their IPO. It's this week, actually. Their planned IPO this week. They're going public. They plan to raise up to $317 million on Friday. So that's a big freaking deal, man. Gemini, another crypto company going public. Guys, all this is going to bring institutional money in. It's new rails, new ways for institutional money to flow from TradFi over to crypto. Just amazing stuff we're seeing across the board. We also saw this. So Cantor Fitzgerald announced a Bitcoin fund. It has gold insurance. So essentially it's a kind of a mix to get the upside of Bitcoin and the safety of gold. So they debuted a new fund yesterday that aims to give investors exposure to Bitcoin's gains and downside protection with gold. Says this gold protected Bitcoin strategy spans 5 years and tackles both risks head on. Captures Bitcoin's upward trajectory while gold provides a safety net that historically performs well when markets decline. So just another way for institutional money to enter in the crypto space and get exposure. It's just happening across the board, guys. We had this story break. Wisdom Tree, $131 billion under management. They're teaming up with Ondo. Ondo, one of the big five I mentioned, one of my big five that I mentioned pretty regularly. They're looking to advance standards for tokenized securities and bring responsible DeFi innovation to on-chain markets. Guys, this is a huge announcement. You look at Ondo on the year, I mean, it's done quite well. Let's see, over the last year, up 50%. We've been really talking about this a lot since the spring. We were talking about, hey, where's the institutional money coming in from? So really back when it was down, what did it get down to? Like 75 cents. So it's done quite well. I think Ondo has a long way to go, guys. $3 billion market cap. This is one that was held by World Liberty Financial. They've had massive announcements. They've partnered with Chainlink. I think Ondo and Chainlink are also working with BlackRock on tokenizing securities. So Ondo is a huge play, man. I think that this has plenty of upside to go. On the other end of things, though, and I'll have more news on Chainlink here in a second. If y'all remember, we covered this one. This is a story around World Liberty Financial. They had this Alt5 Sigma company. They raised $1.5 billion. This is about a month back. Yeah, August 11th. $1.5 billion by issuing shares to fund a corporate treasury centered around the World Liberty Financial tokens. So yeah, $1.5 billion. This news came out today, though, that Eric Trump was an advisor in this company. Apparently, he stepped down today. So it said, according to the report, the decision to remove Trump Eric Trump, was made in consultation with the NASDAQ Stock Market LLC to ensure compliance with its listing rules. So there is some concern there about him being on that board, that it would not work in compliance with the NASDAQ. So says that the specific regulations that prompted this action were not disclosed in the filing, but he did step down. Upon that news, we saw World Liberty Financial token drop quite a bit, like 7%. And I think at the time it was like below 20 cents. It's back up about 20 cents, but $5 billion market cap. This has not performed very well. This is one that we looked at the holdings of World Liberty Financial, but definitely faded buying the token. There's a lot of people that are like, yeah, it's a great time to buy. Maybe. I don't care. There's plenty of other opportunities there, guys. Some news around the stablecoin markets. So Hyperliquid is planning to launch their own stablecoin and cut reliance on Circle's USDC. We're seeing a little bit of this happen. A lot of these entities are trying to launch their own stablecoins. Of course, Circle recently announced that they want to launch their own blockchain. We've talked about why I think that is. I think with these stablecoin issuers, a lot of their revenue is coming from buying T-bills. Well, we know that the Fed's going to be lowering rates. That's going to cut into their revenue generation quite a bit. I think a lot, USDT is talking about doing this too, launching their own chain so that they can capture those fees. I think that's what they're trying to do to offset some of the losses they're going to experience with the Fed cutting rates. And of course, those short-term treasury bill rates will follow. That's going to be a big hit to their revenue. Obviously, they're expected to do a lot more volume, but to keep their shareholders happy, I think they're going to want to pick up revenue everywhere they can. Obviously, Circle, they had quite an IPO, guys, earlier this year. I think they launched at like $31, got all the way up to like $270, I believe. It has obviously come back down to earth quite a bit, still far up from where it IPO'd, but definitely back down to earth quite a bit from where it was. So will that continue? Will we see more announcements like this? Obviously, that wouldn't bode well for Circle necessarily, but with the amount of growth we're expected to see in stable coins with that stablecoin bill, and really the U.S. pushing for that because they need buyers of our debt, I don't think there's going to be any shortage of opportunities for Circle to bring dollars on chain. Chainlink. So that's why I said we would bring up again. Grayscale filed for a Chainlink ETF with the SEC. So here, get ready for the real alt season in Q4 because all these spot ETFs are coming. I do think that this is going to spur that the institutional money flow because that's been what's lacking. Let's be real. Ethereum has really run. We saw Bitcoin really run. We haven't really had a clear-cut way for major capital inflows into these alts. In particular, we're talking about Solana, Chainlink, XRP, Doge. All those plays are the ones that we're kind of like, okay, Avalanche is another one. How is the institutional money going to flow in? The spot ETFs are an obvious choice. We saw that Osprey Solana ETF, that not quite a spot ETF, but kind of a workaround. We've had a lot of money flow in there. Solana's obviously done quite well. So I think the spot ETFs are going to provide a lot of institutional money flow. And that's incredibly exciting for us in the altcoin space. Chainlink's done pretty well, though. If my chart will load here. There we go. Over the last year, up 118%. Man, I think Chainlink can go a lot higher. I saw there were some posts recently from Amir over at Helium, like, how are they undervalued? Like looking at their market cap. Apparently, they have a lot of off-chain revenue. to me, that's kind of sketch. But seeing the partnerships that they've announced, they're literally working with like, everybody on the institutional side. I just have to think that it's still got room to run. I would like to see that revenue get on chain though, because it's otherwise just kind of like, well, take us for our word. Okay. But on the last year, again, up over 100%, 118%, sitting at $15 billion market cap. Ondo and Chainlink are two that are in my top 5. We've been talking about a lot, obviously up quite a bit already, but I think could still run. Speaking of the ETFs, there's a Doge ETF that's going to begin trading on Thursday. Says that the United States' first meme coin exchange traded fund ETF is set to debut on Thursday, marking the latest step in the expansion of a regulated crypto products after the successful rollout of Bitcoin Ether funds last year. In a social media post Tuesday, Bloomberg ETF analyst Eric Balchunas said the Rex Osprey, this is the same type of deal that was that they did for Solana. So very similar to that ETF. Doge ETF, it's DOJE. It's set to debut Thursday. They listed, here we go. They also listed a bunch of other ones. You notice the overwhelming amount is in Solana here. So these are the ones we got to keep an eye out for. Solana, XRP, Cardano, fine. There's a lot of big Cardano people. I have some from like 5 years ago. I'm still holding, like, not super excited about it. But Cardano's there, HBAR, Polkadot. Yeah, I'm not interested in Polkadot either. The ones I'm really looking at, XRP and Solana, for sure. Doge is interesting. This is one that I brought up before that I've been keeping an eye on. This BitOrigin. So $33 million market cap. I want to say they have like 20 million in Doge they're buying. And sitting at 38 cents, so up 5% over the last 5 days. But there's another one that was announced today. Another treasury, Doge treasury, Clean Core Solutions. They said they acquired 285,000 Doge tokens. They got some big plans, guys. $68 million worth of Dogecoin. They plan to accumulate 1 billion Doge within the next 30 days. I missed that part. Long-term goal of owning 5% of the total supply. And this is a good time to pull up Bob's comment here. Now we can go full degen. Yeah, if a company buying $68 million worth of Dogecoin is not degen enough for you, I don't know what is, guys. I really don't. But look at the movement on this thing, man. 45% over the last 5 days. 26% just today. Well, last month, not so good, but since they announced this, man, you got to really be on top of this stuff. Like, as soon as the announcement hits, boom. These things pop. A lot of times they pop a little bit before they make the announcement. Let's be real. So I find it hard to believe that's just luck on the part of the people that are positioning themselves there. But what's the big one? Solana, guys, of course. We got to talk about Solana. Solana's been making moves. What's the sin of the candle today? Apple cider, baby. It's fall. It's fall. It's fall activity. PSL season. Solana claimed the number 1 trending spot on CoinMarketCap. Oh, let me get some water. Sol is like, again, has been my highest conviction play for a while. This was a big announcement that came down. There's another treasury that came out and was like, hey, we're going to be buying $1.65 billion worth of Solana in cash and stablecoin commitments. Was Forward Industries. They went on a pop off, guys. In the last 5 days, over 100%. Insane. Today, 11.59% alone. So you're seeing some of these treasury plays really go crazy. You know it's not? You know it hasn't been? You guys probably know. Upexi. I was looking at their MNAV. It's like 1.3 right now. It's lagging majorly. It makes me wonder, like, Solana, we've been right about that. Solana's been going crazy. Some of these treasury companies are lagging behind. I need to look into this because, we did get the news from the NASDAQ last week that they're kind of tightening the screws on some of these treasury companies. And I'm wondering if, like, I was talking to Tyler with Unleashing Deepin about this. I'm like, I wonder if some of that premium people were willing to pay, because now it's going to be a little bit harder for them to act as quickly and really hit those windows of when it's best to buy, if people are associating less of a premium. But I have to say, like, UpXT to me, sitting at like a 1.3 MNAV, Strategy's at the lowest it's been in quite some time. It's like 1.55. I think Bitmine's pretty far up there. So I have to think. I mean, what's it at after markets? 548, so it hasn't changed much. Man, I have to think, as we see these catalysts come together, because we are front running it. I mean, the plan has been DCA, knowing full and well that there could be a lot of volatility and some potential downside in September. So none of this is really surprising. The part that's surprising to me a little bit is that Solana's price has done quite well, and these treasury plays, some of them have decoupled quite a bit. That part to me is the surprising part. But the overall overarching thing here, guys, is we have the Solana spot ETFs coming. We have the market structure bill coming. That's going to provide massive inflows of institutional capital. And we know that, these treasury plays, UpXT, DFDV, now this Forward Industries, they're going to be adding a lot. So they should track. Now, will they decouple, to the downside? Sometimes probably, to the upside probably as well. So it doesn't change my overall conviction looking into Q4. But I think it is a little bit strange that it has underperformed to an extent. We saw DFDV, DeFi Development Corp. They've had some big announcements, but they've also decoupled a bit. And you see after markets here, they're down quite a bit. So again, are these MNAVs, have that changed a bit as far as what people are willing to pay as far as a premium goes, because of those NASDAQ rule changes? That's the question. That said, I thought this was pretty staggering news here. You've got 4 freshly created Solana wallets that have received $222,000 for the sold $48.2 million from Coinbase Prime, each receiving an equal amount. Okay, so you'd have to think that this is the same buyer. Is this a treasury company? Is this some entity, or is it an individual investor that is just looking to move into Solana? Either way, when you see these types of moves, that's a good sign, guys. You see the treasury companies moving in. The sharks are circling Solana right now. We're seeing kind of some capital outflows of other assets, but we're seeing Solana make moves. And in particular, we saw it hit $220 yesterday. Even after the news of today, Solana is holding strong. And I think we have a long way to go. As I've said in some of my prior streams recently, I think we're going to see Solana hit new all-time highs this year. I really do. It's not financial advice. That's what I think. I've been beating this drum for a while, and really started beating that drum hard when it was, in the 170s. And we've just watched this thing tick up. Again, how will the treasuries play here? I think, well, obviously, I think they're going to go up as Solana goes up. The question is, how much of a premium will they be able to demand, in their valuations? And that's the big question for me. I might look to get some exposure to this Forward Industries potentially. I'm not really looking to do that this moment, because in my opinion, I mean, something that's pumped 117% over the last month, that doesn't really excite me too much buying into that, even 11.5% today. But if we do see any major pullbacks on this one, I will likely get some exposure there as well, just to kind of diversify across some of these treasury plays. But guys, I think Solana to me is still the big next play. Of course, we got to pay attention to CPI, PPI, FOMC next week. All those events, could have an impact on the short term. But Q4 to me still is looking more and more like the quarter that we've been waiting for. Let's talk about some deep end stuff. Aoki had this video come out. They're talking about how they are helping for spatial awareness for these robots, man. So using, I guess they're saying that a lot of these robots have to have additional sensors equipped, and they have to have, new maps loaded onto them depending on the space they're in. What Aoki's doing is essentially mapping out these different areas. Doesn't have to be on their servers, so any entity can keep their own data, and these robots essentially just scan a QR code using the sensors already on board, and they can navigate around these different spaces without having to download these maps locally. So pretty cool stuff what they're doing, and they've had some huge freaking announcements, guys. Like, they're working with some big Web 2 customers, and robotics is going to be absolutely massive. It was not that long ago when the NVIDIA CEO got up on stage and was like, hey, robotics is the next big thing, guys. So, Mike Horton too. Mike Horton's been, talking about this ad nauseum. Robotics, okay? Robotics is going to be huge. I think Aoki is a good play. Just looking at some of the partnerships they've announced, and you can really get ahead of this next, narrative, if you will, that's coming. Currently sitting at a $48 million market cap, $49 million market cap, just under 2 cents here. This is one that I'm really looking at. Built on Base. So, you're seeing a lot of institutional adoption there. This thing has been making moves, though, obviously. I wonder what the max, though. Still well down from where it's been. It was about 3 times the price prior, not long ago, back in January before the market dropped out. Obviously, it's been on a nice little run over the last month or so, but definitely a project to keep on your radar, guys. A couple of plays that I am adding to right now based on some events that have taken place that I think are providing really good buying opportunities. One is Rover. So this came out in their Discord. Rover had one of their reward wallet hacked or was compromised in some way, shape, or form. 2.2 million tokens sounds like a huge deal. It was about just under $20,000. They went straight to the market and sold it. So obviously not great news, but at the same time, it could have been much worse. I have spoken with their team, with GeoNet team, about it. It's something that they're aware of, and they're obviously going to make sure this doesn't happen again. But to me, these types of events can lead to somewhat of a sell-off and a really good buying opportunity in many cases. I already thought that Rover was relatively undervalued for, you look at the circulating token market cap, just over $1 million. But you can see right here, I mean, this is that sell-off, right? They took those tokens straight to the market, sold them off. This to me, I'm looking to buy that dip. Okay. So it has nothing to do with the fundamentals of the project, which I already thought was undervalued anyway. This seems to be a one-time event that could be a really good opportunity to take advantage of, right? So that's how I'm looking at it. These opportunities you really have to keep an eye on. But of course, Rover is using LiDAR technology, selling that data to autonomous vehicle companies to train their models. This is also going to be absolutely critical for mapping out these different regions for robotics too, guys. So it's not just EVs. Robotics, again, they need to have spatial awareness. Rover is partnered with GeoNet. So they're using the GeoNet network to get precise location of their data collection. And we know GeoNet is making some big moves right now. So to me, this seems like a project that could make some really big moves once people start to catch on to what they're doing. They also just came out with an announcement that they're going to be shipping their next batch of the Litecoin, their the flagship LiDAR model is going to be shipping probably later this month. So that's a big deal too. They're going to get more and more coverage with that. One other one I want to highlight here. I had this group on earlier today on the space. I had their co-founder on. He's a pretty fascinating guy, man. He started an internet company back before like Netscape was even a thing. He got into AI super early on, before AI was really a big thing. He got into crypto. He's mining Bitcoin back in, like he said, 2013. So this guy has some serious vision, and now he's in DePIN. Okay. And what Havelo is doing. So again, you can go to my page there, X account, and give that a listen. Highly encourage you to listen to this one. What they're doing is really making it easy for people to monetize their compute resources. So if you have a computer that's sitting idle, that's not being used, that's just sitting there kind of plugged in, you can now make money off your compute resources. Okay. All you have to do is go to their website, download their app, install it on your desktop, and then based on the type of compute resources you have CPU, if you have GPUs, they're going to, their algorithm will select which projects based on your location and your type of compute resources. They're going to select which project is going to be the best for you to monetize your resources through. And they're going to do this balancing, right? So you'll be able to participate in multiple different compute projects without having to do crazy research, without having to figure out how to onboard into these different projects. It's as easy as downloading their app and clicking a freaking button, guys. And you start earning right away. So super interesting project. I think you're going to see more and more of this where, as we see, people from the Web 2 space look to enter this space, anything that can help remove friction and make it easier for the people participating, I think is going to be really, really valuable. And they're also working on ways that on the back end, you can choose how you want to earn. You can either earn the token. So like they've got 11 projects right now they're partnered with on the back end. So you go through their process, you might start earning Nosana tokens. You might start earning Theta tokens. They've got 11 different DePIN projects, and they're adding more that you can earn with. And you can choose, okay, do you want to earn the tokens from those projects? Do you want to get paid out in USDT? They're adding a mechanism that you can just get dollars sent straight to your freaking bank account. You also will be able to earn Havelo token if you want. Okay. So pretty cool stuff there. One of the things I want to call out though, and again, this is another one that I think could be undervalued. In their pre-seed round, they raised $2.5 million. They were at a valuation of $15 million in fully diluted valuation. Guys, if we look at their current price, market cap of $274,000, just under $275,000, total fully diluted valuation of under $4 million. And, I brought this up on the space earlier, and Dom, the co-founder, he's like, listen, obviously, yes, market conditions haven't been great, but he said that one of the centralized exchange listings they got, the exchange, the second they got tokens, just dumped all of them. And it dropped the price significantly. So they've had a couple of events that have led to big sell-offs. To me, this is one I'm really interested in adding to. I mean, they're at like 30% of the valuation from their pre-seed round right now. As we know, this year, these valuations, especially in DePIN's lagged in a major way. So I think for the first time ever, actually, the fundamentals are shining through. I think some of these projects you could argue are undervalued. And this is one that I think could have some significant upside from where it's at. I mean, that's $274,000 market cap is freaking insane, guys. That's like a meme, like a low cap meme coin. And they're building something real. They're partnering with like real projects. In their recent airdrop, they had like 38,000 participants get that airdrop. Dom also said that they have projects now approaching them to bring a supply online. So you have a co-founder that has a proven track record, right? It's an early stage project. The market cap is incredibly low. It's been beat down below their pre-seed valuation. To me, it seems like a no-brainer. This is on Solana, by the way. This is one that I'm looking to probably add a pretty big bag to in the next day or two, and just kind of see where this thing goes. To me, the risk reward's there. Not to say these things can't go lower, but like you have a real functional product. Oh, the other thing he said is, I guess there's something with they showed up on like the rug check or something, which is something that you use for like meme coins. Obviously, this is a legit project. So there's just like a number of events that have really pushed this price down. So one to keep on your radar, guys. obviously not financial advice, do your own research, but when you find these type of outliers, real teams building real stuff, and the price is just seems to be disconnected from reality. Those sometimes, especially when the markets are down, tend to be the place where you can do the best. One other thing, and I'll leave you with this, guys, and I mentioned earlier, helium is now net deflationary. By the way, follow Dylan Bain, guys, if you don't already. You guys bring some serious alpha. FTV, fully diluted value over revenue, is about 26x. Revenue is now equivalent to earnings giving 100% burn. So, man, 26x. This is, that's like the valuation that you see in the traditional stock market. You know what I mean? That's pretty crazy. H&T is becoming maybe the largest bargain in crypto, especially if you have any expectation of further Helium Mobile revenue growth, which obviously we do. We see Mexico coming on. Bob said, go Havela. I agree. Go Havela. I know people are like, oh, I don't know. These tokens aren't worth that much. Just wait, guys. Just wait. Okay. That's one I would say I'm remaining very patient on, and I'm looking to accumulate because right now, I just fire sale, baby. Fire sale. But buffet mode on Helium, man. Get ready to eat. Okay. I have to agree. I think it's very exciting. This is the first time we've seen a DePIN project become net deflationary, meaning that the token burns are exceeding the new tokens that are being issued to participants. Okay, so we're actually seeing the token become deflationary, the supply become deflationary. We've talked about it. It's kind of this pie in the sky thing for a long time. Like, oh, maybe it'll happen someday. To see it actually happening is freaking cool, man. And I have to say that the price, you wouldn't freaking know it because the price is down at $2.32. Like, these are ones I can't wait to come back to, when the market does rebound. And I think the Solana catalysts, this year in Q4 are going to prove to be very beneficial to DePIN, in my opinion, but especially projects built on DePIN. But you look at Havela, you look at Helium at these prices, the fundamentals are shining through. The teams are freaking executing. Man, I think we have some brighter times ahead, guys. I really, really do. Oh, what do you guys think? What do you guys think? Oh, and that is what I got for you today. I fly out again on Thursday, so I'm going to try to, I got to see what time my flight is. I'm going to definitely be on tomorrow. I'm going to try to get on Thursday morning before I head out. I don't know if we'll have the CPI numbers yet when I go on, but we'll cover all the news because there's plenty of news happening every single day in this space. It's super exciting, man. I think you look at blockchain technology, everything's moving on chain. You have RWAs, real assets moving on. You have the stock market moving on chain. You've got AI, especially the compute side, the intersection of both. And then DePIN is just hitting that in so many different ways. There's so many promising projects, so many smart people coming into the space and building. Guys, it just, I feel like we are just accumulating. Just a matter of time before this thing just fucking explodes. I don't have a crystal ball when it's going to happen, but we've certainly paid our dues this year. I'll say that much. It's been a little bit rough as far as price action goes, but the fundamentals remain strong. Oh, have a wonderful evening, guys. I will be back with y'all tomorrow. Appreciate each and every one of you. If you are watching this on X, make sure to share it and like it. If you're on me on YouTube, like it, subscribe if you haven't already. I've got some videos of me dropping on there this week. Peace.